Okay, we're going to start off the show with a very special guest who joins us live from the Kodak conference in Mumbai. Mr. V. Balakrishnan, member of the board and chief financial officer at Infosys, joins us live on the show. Bala, thanks for chatting with us live here on ET Now. Tell us, how has the environment been since you reported earnings last month? Do you think in March you're still going to be looking at flat revenue growth? And for the full year, that's FY13, we're going to look at growth of under 15%?
I think the environment has not changed from what we said in the beginning of the quarter. The European economy is still struggling and there is no solution in sight, and the customers are generally cautious because the way the environment is evolving. So we're not seeing any big change in the environment from what we saw in the beginning of the quarter. And for next year, hopefully the environment stabilizes at some point of time where the clients get more comfort. That is what will drive the growth. And the clients are still in the process of finalizing the budgets. Once they finalize the budget, probably will have a better view or visibility on how the next year will span out. That we'll talk in April. But right now, I don't think the environment has changed much from what we saw in the beginning of the quarter.
Right. Bala, the reason I asked is in the last 1 month, you've seen some of the US IT companies report strong numbers, whether it's IBM, whether it's EMC, even Apple for that matter. Sentimentally, the mood in corporate America isn't as bad as many thought it would be. So to that extent, do you think IT budgets could look better in the second half of this financial year?
I think some of it is also because of the December holiday season sale, because Apple has seen good revenue growth because the December sales had been good. But I think for the IT outsourcing industry, the environment need to stabilize for the clients to come and spend. Even if you look at product companies like SAP and Oracle, they have seen good amount of growth. But for that to translate into IT services revenues, that will take some time, and that also depends on how the environment spans at that point of time. So I think in our business, we have seen the clients being cautious, and that has not changed now.
So Bala, just to stretch that point forward, during your last results, that is in the third quarter, you had hinted that IT budgets are likely to be finalized in the next 4 weeks. What is your sense now that 3 weeks are over? Is your expectation for IT budgets for 2012 the same as your earlier reading of budgets? Because you had mentioned earlier categorically that it is going to be flat to marginally lower.
I think based on our conversation with our clients, we believe that budgets for next year could be either flat or slightly down. And for a company like us, I think more than the budget, the amount of offshoring which will happen within that budget is the most key indicator, because that will decide how much we will grow. So the offshoring component is very important. Number two, even when clients have budget, there is no certainty that they will spend the money. That will again depend on how the environment evolves. So I think there are a lot of variables to this. We have to wait and see how the client's budget spans out. The initial indication is it may be flat or slightly down, and that will give you a visibility on how much the client intends to spend. And we have to see whether the spending actually happens. For that, you need some stability in the environment. That's what I am talking about.
Bala, some analysts also say that there is a disconnect in the company saying that they will continue to be aggressive on hiring front, and on the other hand saying that visibility on IT budgets is not there. You have made a 20,000 campus offers for FY13. Does this mean that you are hopeful on higher shift towards offshoring with flat budgets?
See, we are in a unique industry because there are two kinds of hiring we do. One is the freshers hiring, and second is the lateral hiring. On the freshers hiring, we have to grow 1 year ahead of the time to the campus and hire people. That's what we have done. We have given some 25,000 offers in the campus. On the lateral hiring, probably we can fine tune depending on how the environment evolves. So this year we hired some 45,000 people gross. Our utilization is close to 76% today if we exclude the trainees. So we have some flexibility for growth. And next year we are given certain amount of hiring in the campuses, and we believe that if the growth comes, we are better prepared. And the lateral hiring is something we can fine tune depending on how the environment evolves.
Bala, this is also election year in the US, and not surprisingly, the rhetoric is back again, not for the first time, and I'm afraid not for the last time. What do you think will be fallout of it this time around? Do you think companies in America will be less inclined to offshore, or do you think companies like yours will be under pressure to hire more local talent in the US?
I don't think so, because the political rhetoric comes every 3-4 years when the election comes. That is nothing new. The economic reality of outsourcing, offshoring is really high. Even when President Obama met some of the CEOs recently in the US, one of the biggest demand for all the local companies in the US is to increase the H1 quota so that they can attract better talent into the country. So I think offshoring industry has done great service to the US economy by enhancing the competitiveness and creating more jobs there. So the economic realities are bigger. There will be political noise because of the election year, but that is not going to stop the economic reality. And of course, we do hire a lot of locals. Every year we hire some 1,000 people locally in the US. As a company, we want to localize most of our operations. So that trend continues. But I think outsourcing rhetoric will come up whenever there is an election, but the economic realities are bigger.
Bala, the bigger concern is, of course, Rupee is back under 50 versus the dollar. How does this impact your guidance, which is based on a rate of 52?
No, we give guidance based on all the knowns. Currency is unknown. The rupee has appreciated from what we guided for. I think we guided at 52 or so. But my view is, if as long as you have a sustained trade deficit, the currency has to depreciate. There could be some artificial currency appreciation depending on capital flows. But once the capital flows stops or reduces, probably the rupee will depreciate again. That's why we are taking a view that even when we do hedging, we'll not go beyond 2 quarters, we'll take a short-term hedge. So my view on currency remains the same. It should depreciate. But I think the volatility will be there depending on how the capital flows are there. That is something we have to manage. We clearly give the assumptions when we guide, and if the currency which is external to us changes, probably it will impact the guidance.
Bala, the other big overhang, at least the way some in the street are reading, is the battle for visas, really, because you have two-pronged battle to fight in the US over the visa route. How are the meetings with the US attorney in Texas proceeding?
I think we are very clear that we have not violated any of the rules. We believe we have a strong case. So the whistleblower case is not a visa issue. It's not a visa case. It's a whistleblower case that will come up for trial somewhere in August. We have to fight it out through the legal process. The other one is a Department of Justice investigation. We are cooperating with them. We are giving all the data. We believe we have a strong case. We'll see how it goes.
Bala, my last question to you. Some analysts feel that there is a strong case for IT companies, especially Infosys, to step up payout or buy back shares as cash flows improve and cash balance on the books is proving to be a drag. Is there any such move that you at Infosys may be considering?
No, first of all, cash is not a drag. Even though we have close to $4 billion of cash, our return on capital employed is still 35%. And we believe we need to have the strategic cash because we are looking at some M&A opportunities, because we have to grow our business in platform solutions, IP kind of business. We have to look at M&A seriously. We are looking at some targets. We don't know when it will happen. So there is a view that we can use the cash to enhance our business in those areas. So we are looking at it. At some point of time, if we feel that we don't have enough opportunities for deployment of cash, we had always returned to the shareholder. I mean, we had given one-time dividends in the past whenever we felt we have excess cash and the opportunities for deployment is low. So I think right now we believe we need the strategic cash. There are opportunities, and we will take a view on it at some point of time.